All right, it is time to take a look at your money here on Good Morning Quad Cities. But first, we're going to get a look at your weekly stock market recap. The S&P 500 down 1.4%. So is the NASDAQ. Dow Jones Industrial Average is down 1.7%. Despite last week's decline, the potential applications for artificial intelligence and how it can drive a new economy has sent the U.S. stock market surging over the past few months. So far this year, the tech-heavy NASDAQ stock index has gained 30%. Much of that is on expectations of expanding role of artificial intelligence within our economy. And we're joined by our financial expert, Mark Grywacheski, to talk more about this. Good morning, Mark.
Hey, morning to you, David. Happy Monday. Great to see you again.
Yeah, you as well. This is such an interesting topic to see
It
artificial
really
intelligence
is.
and things like that. So I'm
Yep.
curious to know, what is Wall Street's interest with respect to artificial intelligence?
Now, what's so interesting with artificial intelligence or AI is it changes technology's role from, calculations and simple programming to actually mimicking the human abilities of critical thought and analysis. Now, from a broader standpoint, so to speak, Wall Street's fascination with AI is its ability to create efficiencies, expand productivity, and unlock new achievements that can ultimately transform our economy. Just think of the gains that can be made in robotics and manufacturing, science, medical research and healthcare. The potential applications, David, are near endless. Now, more specifically, Wall Street is obviously interested in identifying those companies that can create this new technology or can use AI to drive higher revenues and profits for their business.
Well, we've seen basic forms of artificial intelligence already, the recommendations on Netflix, for example, or self-driving cars, autonomous cars on the road. So what is triggering Wall Street's sudden interest in artificial intelligence and its potential?
Well, you're right, David. We've seen a number of very basic applications over the recent years, but this recent resurgence in this interest in AI really started maybe about last month when technology company NVIDIA released its first quarter earnings. Now, NVIDIA is a leading manufacturer of microchips and technology used in many AI applications. And over the past year, David, NVIDIA's earnings rose 26%. And NVIDIA cited this literal surging demand for its AI technology as companies increasingly embrace AI to grow their own business. And soon after that, other companies like Microsoft, Google, Amazon, and many others announced their own AI initiatives. And this really created, David, this almost realization on Wall Street that more and more companies are looking to AI as the future for their business.
And it's still kind of a new thing. So how are companies
Yeah.
wanting to use this AI technology within their businesses?
Right now, David, there seems to be a couple of two main paths. For example, in industries like engineering, healthcare, we're seeing it in automotive, definitely entertainment. AI can be used to provide a better product output or customer experience that can then drive those higher revenues. But we're also starting to see companies embrace AI to reduce costs. Remember, for over 3 years, David, companies have been struggling to get people to return to the labor force, and this has literally sent labor costs soaring. We've also had high inflation. Now we're dealing with high interest rates, and companies are looking for AI, especially in the realm of robotics, to help keep their operating and labor costs down.
Okay, well, we've also seen the surge in the stock market from Wall Street's excitement over the potential that AI has. So what are your thoughts on investors looking to capitalize on this?
Yeah, you're right. We've had this initial surge in the stock market, but I think last week's decline is maybe a cautionary warning that that stock prices may have risen, a little too high, too fast. In my opinion, David, wait until these stock prices come down a little bit. Look, there's still tremendous uncertainty over inflation, interest rates, and a very, very cloudy outlook for the U.S. economy. But also, be careful about investing in individual stocks. I know they're tempting, but right now it may be better to invest in a fund that maybe tracks the performance of the broader stock market, like the S&P 500, like the NASDAQ, to diversify your risk. As we saw a few years ago during the pandemic, David, there was this, similar rush to buy, biomedical companies or biotech companies as all these companies race to find a vaccine. But as we usually see from these type of events, David, there tends to be an eventual, consolidation of key players. And in this case, it was, Pfizer, Johnson & Johnson, Moderna, and a few others. Most of the other companies quickly saw their stock prices plummet back down to where it started. So be careful.
Be careful. Definitely. It's a new thing. Thank you so much, Mark, for your expertise. We'll see you again next week.
Yep. See you next Monday, David. Enjoy your week.
You too. Thank you.